The House of Lords committee tasked with studying the matter earlier this year said unequivocally that there is no good reason for it and a lot of potential risk involved. However, Jeremy Hunt, the Chancellor of the Exchequer, is going ahead with the process of the introduction of a central bank digital currency, a digital pound, into the UK. This is the timeline of events so far. In March 2020 they put out this discussion paper where they say the use of banknotes, the bank's most accessible form of money, is declining, and use of privately issued money continues to increase, with technological changes driving innovation. Privately issued money means Bitcoin and other such cryptocurrencies. And the graph clearly shows a radical decline over 12 years in the use of cash. That's down to the people and the people alone. You can't blame the government for that. Then April last year, a terms of reference. Then in June we seem to have another discussion paper, and then a statement in November. This march towards digital currency hit a roadblock this year when a House of Lords group, including Mervyn King, the former governor of the Bank of England, who you might remember was the one on the BBC the other day who said the furlough scheme caused the inflation. They published a report looking into it. Central bank digital currency, a solution in search of a problem, so they clearly wanted to underline their objections at the first opportunity. The report concludes that there is no convincing case for why the UK needs a central bank digital currency. The committee found that while a CBDC may provide some advantages, it could present significant challenges for financial stability and the protection of privacy. I'll explain these objections. The people, bless them, might see this new toy they have to play with, say, yay, let's put all our money in it, transfer all the money they have in their bank accounts into the CBDC, and thereby destroy the financial system. This would be a worst case scenario that they envisage, and also concerns that the government might have genuinely about preventing criminal use might lead them to the kind of restrictions that ultimately would infringe on privacy. Their desire to limit the danger of using the currency to pay for criminality would lead them to putting restrictions on it so that you could only pay for X, Y and Z with your new digital currency, which two slippery slopes would be like going down Mount Everest on a sled made of Vaseline. Lord Forsyth of Drumlin, chair of the House of Lords Economic Affairs Committee, said the introduction of a UK central bank digital currency would have far-reaching consequences for households, businesses and the monetary system. We found the potential benefits of a digital pound, as set out by the Bank of England, to be overstated or achievable through less risky alternatives. We took evidence from a variety of witnesses and none of them were able to give us a compelling reason why the UK needed a central bank digital currency. The concept seems to present a lot of risk for very little reward. We concluded that the idea was a solution in search of a problem. As per the headline, a solution in search of a problem. They put that question mark at the end for the sake of politeness. Is this a disastrous idea? Maybe, but that is their conclusion, that it is a solution in search of a problem. There's no diffidence about that. A solution to a problem that does not exist, i.e. it's not needed. So the House of Lords Committee is about as definitively opposed to a CBDC as it would be possible to be. So has Jeremy Hunt taken their lordships' wise guidance into consideration and said, well, upon reflection, we will not be proceeding as originally planned? Well, of course he hasn't. He's going ahead just the same. This was his very recent statement, bringing forward a consultation in the coming weeks to explore the case for a central bank digital currency, a sovereign digital pound, and consult on a potential design. We're at the design phase, but we're only thinking about it. It might not actually happen, but we are actually designing the thing. And didn't the Lords just explore the case for it? Why would you have the upper chamber look into it if you're going to completely ignore their recommendations? And a couple of months previously, the Bank of England put out the latest of those papers of theirs repeating what they'd said previously. Financial technology firms have started to offer new forms of money and new ways to pay. People are using cash less. These changes mean new opportunities and risks that we need to plan for. Notwithstanding the fact that it could collapse the banking system and be programmed to levels of super control, the government's panic over cryptocurrency, i.e. their loss of control, is the overriding motivator. Loss of control has to be met at all costs with the reassertion of control. I think the well-paid public servant, well paid to serve the public's interests and not their own, seems to somehow have got lost along the way. The obvious answer to all of this is to use cash as much as possible. I went from exclusively using credit cards up to about 18 months ago to only using cash now and using cards online only on occasions when I have to. I always use cash now. And the more people use cash, it's a simple fact that the more businesses will see cash as a part of their economic structure, and the more they will push back against any government attempt to phase cash out, which is happening elsewhere. From the Washington Post: Nigeria to cap ATM withdrawals at $45 a day in push for cashless society. Nigeria introduced a digital currency last year and it was a total failure, because cash is ubiquitous in Nigeria. 85% of currency is held in cash, so now they're trying to strong-arm the Nigerians away from it in order to have CBDC have a greater chance of working. Clearly cash has taken a big hit in the UK, but apparently it's not all doom and gloom according to the Bank of England. The return of cash. The COVID-19 pandemic had a significant impact on people's payment habits, with cash use falling significantly and by more than other payment types. This has led to some concern that COVID has hastened the demise of cash. But since coming out of lockdown, we have seen a sustained, if partial, recovery in cash use, and more recently a stabilization in cash use trends. Moreover, the value of banknotes in circulation remains elevated even 2 years on from the pandemic at close to a historic high. This reflects people, up to 60% of the population, holding more cash as a store of value, which is a fundamental role of money. People are viewing cash reserves as a positive. So we're not at Nigerian levels, obviously enough, 85%, but apparently we are at a historic high for holding cash reserves. Another positive is that cash point withdrawals are up. There were two big dips in early and late 2020, no surprise there, but since then they've been increasing, and December 21 was actually back to 2019 levels, but they fell off again this year for some reason. You can Google that and read the rest if you want to. It doesn't paint a particularly bleak picture, but it also doesn't herald anything other than the ultimate demise of cash, and that is because people don't want it. You can't blame the government for that. If the people don't want to use cash, they won't use it, and that's entirely down to them and nothing else. The more people use cash, on the other hand, the harder it would be to get rid of, and the less relevant a CBDC would be. So, use cash whenever you can. And remember that House of Lords committee concluded that a central bank digital currency was a solution in search of a problem. A solution to a problem that does not exist. And if you have a solution that doesn't have a problem, then that probably means that the solution is the problem itself.